Hey everyone, welcome back to Corporate Decoder, the place where we decode and demystify the world of big business, one filing at a time. Today we're looking at SEACOR Marine Holdings Incorporated, and let's just say they've been busy selling off some assets. It's like a corporate garage sale, and we're here to see what cash they've raked in and what it means for the company. So, what's this report all about? Well, SEACOR Marine Holdings Incorporated, or SEACOR Marine Holdings Inc. as they're formally known, is putting out an 8K form. This is like a special announcement for investors, telling them about some really important stuff that's happening. Usually pretty quickly in this case. The big news is about some asset sales. On the 29th of September 2025, SEACOR Marine Holdings Incorporated, through some of its subsidiary companies, sold two of their US flag lift boats. Think of these as specialized boats used for offshore construction and maintenance, especially with those big crane arms. They sold the Ellerby Jill and the Ellerby Robert for a total of $76 million. After all the costs and fees, the company walked away with about $75.1 million in cash. That's a pretty significant chunk of change. But wait, to raise more revenue. On top of selling the actual boats, they also sold some equipment that wasn't yet installed on any vessels. This brought in another $1 million. So in total, we're looking at around $77.1 million in cash generated from these sales for SEACOR Marine Holdings Incorporated. It seems like they're really streamlining their operations, focusing on what they think is most profitable. Now, when a company makes a big sale like this, especially one that changes their financial picture, they provide what's called pro forma financial information. It's essentially a what-if picture. It shows you how the company's finances would look after these sales have happened, as if they occurred at an earlier point in time. It helps investors understand the immediate impact of these transactions without needing to wait for the next standard financial report. We're talking about the unaudited pro forma financial information here, which means it's not yet finalized or given the official audit stamp, but it gives us a very good snapshot of the current situation. Let's look at their publicly traded securities. SEACOR Marine Holdings Incorporated has its common stock with a par value of $0.01 per S-share, trading under the symbol SMI on the New York Stock Exchange. This is important because it tells us the company is publicly traded and investors can buy and sell shares, and these types of asset sales directly impact the value of those shares and the company's overall market standing. And signing off on this report is Andrew H. Everett II, who holds a pretty important title as Senior Vice President, General Counsel and Secretary. Having the legal and corporate secretary sign off shows that this filing has been officially approved and reviewed by the company's leadership. The date of this signature is the 3rd of October 2025, which is just a few days after the actual asset sale happened on the 29th of September 2025, showing that they're being timely with their disclosures. Now, for my take on what this all means, SEACOR Marine Holdings Incorporated is clearly in a phase of divesting certain assets. Selling off not one, but two lift boats and associated equipment signals a strategic decision to perhaps exit a particular market segment or to raise capital for other ventures. The $75.1 million in net proceeds is a substantial amount of cash, which could be used to pay down debt, invest in new assets, or return value to shareholders. The crucial question for investors is why these specific boats were sold. Are they aging assets? Is the market for these particular lift boats becoming less attractive? Or is SEACOR Marine Holdings Incorporated pivoting towards a different type of offshore service? Without more context from the company's investor calls or other reports, it's hard to say definitively. However, focusing on cash generation through asset sales can be a good strategy if managed well. It ensures liquidity and can allow a company to become more agile. A key risk here is understanding the long-term strategy. If these are core revenue generating assets, then selling them without a clear plan for reinvestment or growth could be a red flag. On the other hand, if they were underperforming or the company sees a better opportunity elsewhere, this could be a smart move. The pro forma financials will be key to understanding how this impacts their balance sheet and their ability to generate future earnings. We want to see that this cash infusion is being put to good use, not just sitting idle. Overall, SEACOR Marine Holdings Incorporated appears to be making bold moves to reshape its business. The immediate impact is a significant cash boost, which is generally positive for financial flexibility. The longer-term success will depend entirely on how they deploy that capital and what strategic direction they choose to pursue in the competitive offshore marine services industry. What's your opinion on these asset sales? Do you think SEACOR Marine Holdings Incorporated is heading in the right direction? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate dives. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and I'll see you in the next one.